Hi everyone, thanks for tuning in. I'm Ben Ford from Australian Open Data Solutions, and today I'm joined by Jill Berry, co-founder and CEO of EtaTree, Gareth Gumble, founder and CEO of Frollo, and Damir Kuka, founder and CEO of Basic. And we're here to talk about open banking, the beginning of a data economy. Before we jump into the discussion, I'm going to ask each of you to just briefly introduce yourself, your organisation, and the mission that you're on currently. Jill, I'll start with you.
Thanks, Ben. I'm Jill Berry, CEO and co-founder of EtaTree. EtaTree is a regtech providing turnkey consumer data right solutions. So it's really easy for companies to participate in the CDR. We have everything technically that they need to participate in accessible with one API in developer environments and production environments as well.
Very good. Thank you. Gareth, how about you?
Sure. I'm Gareth Gumble. I'm the founder, as Ben mentioned, of Frollo. We're a purpose-driven fintech really focused on helping people feel good about money. So we use their financial transaction data, more recently open banking and data from the consumer data right, to help deliver a better, more accurate picture of people's finances and help them guide them to do and create better solutions for their financial lives. We provide that in a consumer app, and we also provide that in a SaaS platform as well for B2B organisations, banks, fintechs, lenders, to be able to take advantage of our technology and our solutions, take that to market. It's fun.
Thanks very much. Last but not least, Damir.
Hey, Damir, founder, CEO of Basic. Basic's an open banking platform. We provide API services to help developers, fintechs, banks create new innovative financial solutions in the market. We work with a range of businesses, anywhere from small startups to big banks looking to solve loan problems or looking to change digital banking.
Thanks very much. So guys, it's been a long time coming. Open banking, it's here and live in Australia. Still very early days. But how would you say we're doing so far in terms of the progress that we've made? What's the report card saying today? Gareth, what's your verdict?
Well, I think the report card's saying we're off and away. We've started, and I think there is no mean feat pulling this together. I mean, the consumer data right was a much broader and ambitious task that we took on than, say, for example, the UK open banking. The task is really to provide consumers their own data in a secure environment, allow them to trust in a trustful manner, share that with their advisors, their banks and their partners. And so, look, I think we're away and we're live. We have all big four banks up and running on with Frollo at the moment. We have millions of calls and APIs to attest that it works. I think we've still got a long way to go, really, in terms of getting to a point where we've got something that's at scale and meaningful for society. But I'm sure we'll cover that through the panel, so I won't steal everybody's thunder. But I think we're up and running. So we should take that as a positive, and then collectively work together as an industry to try and build on that and deliver powerful solutions for end consumers as quickly as we can.
And Damir, over to you. We've been on panels before discussing this. 2 years ago, I think we were on a panel having a similar discussion when open banking was an idea and in its infancy. What's your verdict on how we're doing so far and the progress we've made since then?
Very early stages. I think if I had to give it a scorecard at the moment, it'd be a C-. I think we measure kind of performance and usages, how fast our developer can go from having an idea to wanting to change the world through some kind of application to how fast they can start consuming those API services. And I think that's where fundamentally we need to kind of improve on. We do have a spec, we've got a standard. It is evolving. It's in beta phase, but it is getting there. And I think that at the moment, for a developer to go from idea to calling an API, we're probably realistically 6 months away. That it would take him to actually make an API call. I think in this day and age, look at Stripe, look at Twilio, look at other API platforms where you can just simply sign up, grab an API key, start to connect. That's the experience that we need to strive to create. But as kind of Gareth mentioned, it's part of a much bigger initiative. We do have this thing called CDR and so forth. We do have a government body that's running it. So they are being extra careful with it. And I think that somewhere we need to kind of balance that carefulness with innovation, and I think we'll get there. So they're showing signs of good good kind of measure and progress, but it's in its infant stages, and hopefully in a year from now again, we'll have a very different discussion.
Very good. And Jill, C- sounds pretty harsh. Is that fair?
I don't personally, I don't agree with that. I think that it was always going to be a slow start. There has been a ton of work from a number of organizations and regulators that have really come to it. So like, what do you have? Like, so much has had to happen for July 1st to actually go live. Obviously, Gareth was involved with testing in the the majors, and just to make sure that data sharing and data receiving actually works. We're also the technical open banking partner for an early data recipient as well. So it's about 8-ish months of manual testing and lots of different scenarios, rules changes, but making it, even though it was delayed, but making sure that it's a great, good experience, that it actually works, that it's something secure. So I'm pleased about where it is, and I think that it will only get better from here. So for all the months of manual testing, no one will have to do that again, which is great for future data recipients. With the Task Conformance Suite coming out, with it just the barriers to becoming an accredited data recipient are decreasing rapidly. So as long as it can scale up, I think that that's the way to really have participation in the ecosystem really accelerate.
Very good. And before we get too much into the weeds, we're all involved in the minutiae of this on a day-to-day basis. It is highly complex and highly technical. If we were to take a couple of steps back, and there were people in the audience who aren't so immersed in it on a daily basis, how would you describe open banking and the consumer data right to them at a very high level? I was having this conversation with my mother over the weekend, still not managed to successfully explain what open banking is. How are you guys explaining it at a very high level to introduce people to the concepts? Jamia, how about you?
Okay, so open banking is the ability to consume customers' financial data, and you consume it through a consent model. So effectively, if you're building an app, imagine one of your users gives you consent to be able to access that financial data. Open banking enables you to be able to connect to the banks, grab a list of all their accounts and transactions, plus a few other metadata along the way, and be able to consume it into your app. And once you can access that data, then you can start to do all the cool stuff, whether it's helping customers through budgeting, investments, applying for a loan, and so forth. So that's what open banking is about. And the whole idea and kind of concept behind it is to stimulate innovation, level the playing field, give you as a consumer more choice into how you engage with your money effectively, whether it's through the brilliant products like Frollo that's out in the market, being able to kind of use that to really kind of get a deep insight of your spending and kind of make you much more financially savvy.
Very good. Who's next?
Now, I would just add on one key part of that is that it's a regulated regime for data sharing. Open banking is the first application of the consumer data right to the banking ecosystem for the sharing and receiving of banking and transactional data. The same way that APRA has introduced the restricted ADI license for introduction of new banks. It's a new regulatory regime for banks to share data and for lots of different organizations, not just banks or financial services, but so many different industries and use cases to actually receive it. So when I think about most of the time we talk to software engineers or CIOs about it, but like my litmus test is talking to my mother-in-law about it and what are the actual use cases for it, because she's like, all right, I understand it's a data sharing regime, but what do I care? Like, why would I ever actually use this? I'm like, well, Liz, you always complain that your Westpac rate for retirees is really low. So if you could share your data with a company that automatically tells you who to switch to or who has the best rate, or given how much you have for your balances or what your transactions are, wouldn't you want that? So instead of complaining about it, you can actually do something about it and have those proactive notifications. Just like, oh, I get that. So it's just like, that's my example that I like to use with her.
Very good. And finally, Gareth, you're unique amongst us in you have a consumer-facing proposition. What does open banking mean to your customers? How do you explain it to them?
Well, I think to build on what Jill just said, I think it's, the regime was really brought about to try and introduce competition, right? It's one of the the objectives we want to get from this. And so the way that we look at it is the ability for a consumer to share their financial information. So they'll link their bank accounts. We also get to see their products that they're on today, and then we're able to provide them a picture of what financial products are you using today, how are you using them today, are you getting the most out of it, what do you need to do to optimize the experience with your current financial institution or your current financial product. That might be you're missing out on bonus interest, you need to tap 2 more times or deposit another $200 before tomorrow, otherwise you're going to miss your bonus interest. Or it could be that we've noticed that you've missed your credit card bill 3 times in the last few months, but you've had the cash there, you've just somehow got your timings wrong. So here's a gentle nudge to get you to do it right. So they're the basic, kind of housekeeping, trying to help people budget better, as Demir called out earlier, but also look for the opportunities where they could benefit. So your mortgage today has a 3%, it's got a 3 in it, so 3% something. Is there a better opportunity out there and a better product for you? We can start to guide you in that way. So as the Frollo app delivers a consumer experience, it kind of looks for what's the next best conversation we can have with you to help you with your money. What's the next best product that we can help you guide towards. And our app is really about us, testing and learning, which is what everybody that's listening today, what Demir referred to earlier is we've got to be able to get to a trusted ecosystem that enables us to quickly, showcase the power of open banking, but also do so in a regulated manner. And I think the government's starting to sort of drive towards that. So Frollo is doing that, is showcasing what open banking is there to do. We're always looking for new use cases and new ideas, and then we pass that out as APIs to our partners.
Very good, thanks. And in terms of the next 2 to 3 years being critical in fast tracking the uptake and use of open banking, what do you think some of the levers are that will drive and accelerate this, and where do you think the responsibility for pulling these levers lies? Jill, I'll go with you first there.
Yeah, well, I think that one really key one that's a very hot topic is ultimately decreasing barriers to entry while still maintaining high levels of security and technical assurances. So how do you really balance that utility? Right now, if you receive data, then there's not much in the rules for helping or having companies involved to actually help you with that. Some of those rules are coming out really soon. So ultimately, if you can partner with someone who's an expert at it, and so you could just focus on your use cases instead of the technical and security standards, they think that that's incredibly key so those are referred to as the intermediary rules. I think that that's really important. Right now, it's read access, and in about 2 years, 1.5 to 2 years, write access should be introduced and implemented. That's instead of reading data and just receiving transactions or customer data and looking at it and analyzing it, doing something with it. It's actually being able to initiate, and that can be different payments or customer updates. So as soon as that is really introduced, then I think the breadth of use cases and the incentives to participate in open banking really skyrocket.
Fantastic. Gareth, who should be pulling these levers? Who needs to do more? What do you think?
Well, I think I think certainly, not to repeat what Jill said, but the intermediary component is really, really important, because what that allows us to do is get more breadth in the industry in terms of building out use cases. From my perspective, the banks need to play a role in this. So, it's been a challenge getting the first 4 live. We've only got limited products on at the moment, so I think there needs to be a big push over the next 12 to 18 months, which is making sure that we have as many products available through the consumer data right as possible, with enough banks serving the ecosystem, because you ultimately have a little bit of a chicken and egg in developing those use cases. That you need access to data, you need a broad set of data to be able to do that. So at the moment, we've got 4 banks. We'll get to maybe 64 by the middle of next year, but there's a decent process between now and then we've got to build the use cases from the ADR side. So I think a fair amount of work still to be done, and those levers are being driven by let's call it the financial institutions that need to give up data, thereby the fintechs and the players such as ourselves sitting here today that are trying to drive the ecosystem, get the technology working and moving together, and then finally it's the innovators coming up with the use cases that deliver end value to Jill's mother-in-law, right? So if she knows now that experience is much better because she's using open banking versus downloading a bank statement and then trying to find a way to scan it and send it to a broker, that's the friction that we're trying to remove, and I think that's when we start to see it. What we won't certainly see is in 2 years' time that Jill's mother-in-law standing on the street announcing open banking's been a life changer, but she will be talking about the use cases that she's enjoyed that have made that friction disappear that was previously there in the financial industry.
Thanks. And Damir, yourself?
I want to answer the part about intermediaries because I think that's been answered quite well, but I will focus on the use case part. And I think that we need to kind of look a little bit outside of open banking as per se, because there's other realms that help kind of influence the ability to innovate. So, for example, easing of licenses around becoming a bank, what's kind of called a bank. We see a lot more companies coming out to market that are providing banking as a service, enabling startups, fintechs to look like, smell like, almost feel like a bank, but not have to worry about the burden around regulation. We also have other initiatives like MPP, the new payments platform, that's also starting to mature and become a lot more widely accessible as well. So I think it's the way I would kind of look at the success of it. It wouldn't necessarily be about the government kind of seeing the need for intermediaries and helping companies such as us to make it an actual physical, practical reality, but also looking at what's the environment that actually operates in. If I do have a use case and I want to create a new buy now, pay later service that's a little bit kind of different, is the regulatory kind of landscape going to enable me to actually do that, or is it going to slow me down? If I want to launch my own kind of bank, can I do that? Is all the infrastructure in place to be able to do that? So I think open banking is there to facilitate that. It's not, doesn't provide the value itself. It's a use case that leverages the open banking data that ultimately provides the actual value.
Fantastic, thank you. And I think we touched on it there, but I'll ask the question anyway. What's the overall verdict on the efforts being made by the big four banks and the rest of the financial institution community, or the larger financial institutions so far? It's often said that they are slow to react to this, or potentially got the most to lose from open banking. Do you think that's true? And how would you rate their contribution so far? Jill?
They're obviously trying a whole lot. Like so some of the major banks have teams of more than 200 people on their CDR program. So it's not like they're putting a lot of effort into sharing data. I think that right now with ADIs, their main focus isn't necessarily receiving data, just because that's like they're really nice to have. But the main effort isn't about sharing; it is for sharing data. Is their July 1st deadline will be coming up really, really quickly. I think that it's tough because everyone has a different API gateway or not, or cloud or front end and core banking platform. So it's not nearly as turnkey as being a data recipient. So they're all pretty customized. I think that they're putting a lot of effort into it. We're talking to a number of ADIs who have teams on this. So I think that they're definitely doing a good job. I think that the real opportunity right now is working with many non-banks who can receive data, and they don't even have to share it yet until they're in a designated sector. So that like those are some of the activities that we're seeing for banks or non-banks.
Fantastic. Damir, any views on this?
Yeah, look, I think that big banks are slow. It's inevitable they're slow. They're designed to be slow because they're designed to be risk averse. And I think that they do have the regulatory burden at the moment of making sure that they deliver on their API promise and that they adhere to that. And yes, for a small little startup, that might seem really simple, but when you've got a huge, humongous bank like NAB is one of our investors, it's no small feat whatsoever. So they do have a lot going on there. I think that they'll also be looking at it, looking at what works and what doesn't work, and it's inevitable that they're going to be forced to react as well. So once they kind of meet their regulatory burden, they're going to have to kind of work out, well, what does open banking mean for me? And it's what we're going to see is we're going to see that across the entire financial landscape, anywhere from customer acquisition. So think about your digital banking experience. You're going to have the ability to kind of aggregate all your accounts. So just because I have a account with NAB, now I'll be able to see my Westpac account, I'll be able to see my CBA account, and anybody else that I have a relationship with into the one single place. That's going to create a lot more competition between the major banks as well. And then kind of leveraging some of the data to help customers become safe for their first deposit, automating that loan application. And once you get a loan, kind of leveraging again open banking to monitor your progress and make sure that you can continue to repay it, and maybe identifying some early flags if you're about to get into kind of some kind of financial issue. Maybe your income has stopped or something like that as well. So I think I don't think we'll see anything too quick from them. I think we'll see the typical kind of use cases of account aggregation, but it's inevitable that and it's kind of destined that they'll have to become the actual masters of it.
Gareth, you're consuming Big Four bank data at the moment. What's that experience been like, and how do you rate their progress or their efforts and commitments so far?
I think their progress has been, really, really strong. Actually, it's incredibly complex what they're being asked to do. They have to bring data across. It's not like they have one back-end system, with everything sitting nicely in that you need to pull forward in an API and then build a trusted regime around it. It's pretty complex, and as Jill mentioned, the scale of that and the size of the investment is pretty massive. But what we have seen, engaging with them is an absolute commitment to get this right, so that there is a focus to deliver a really strong and trusted experience to make sure that the consumer's data is protected, it's secure, and and how it's shared appropriately. The challenges that we've seen are that the data quality isn't as great as we would like, and there's a commitment across the banks and across the regulator and the consumers of data to improve the data, and because the result of that is it makes it more tricky for us to deliver on the use cases if the data isn't as clean as we're hoping for when it comes in. There were some learnings, coming into it that I would say, Jill mentioned that, there was a lot of manual testing to be able to get through. That's pretty significant, and we're still in that again for, the November release that's coming up, which is another big drop of functionality in the consumer data, right? The other sort of the lesson is really that all of us really need to be able to understand what data we're going to receive and to be able to see more test data and to have been able to consume data and actually test the APIs with a bit more volume and a bit more scale would have given us, I think, the ability to run a bit harder when we first actually went live. So, it's still building. The consumer process and the consumer experience is still not as great as we would like, based on that data quality and internal bank processes. But we can see that the KPIs against that improve every single month. So we're able to successfully link more and more users every single month. That experience gets smoother every single month, and the speed of the APIs is not in question. The ability to get the data, get 12 months worth of data, categorize that, deliver some kind of value back to the end user is in seconds, not in minutes. So I think what we've got is a secure, scalable infrastructure that works at speed with some anomalies that really need to be ironed out to deliver really, really smooth experiences for everybody that wants to engage in it, because that'll be the best outcome for the whole ecosystem.
Fantastic. Sticking with the implementation of the CDR, one thing that's quite telling or quite interesting is the fact of the 10 organisations initially selected by the ACCC to test the open banking or the CDR regime. There's only 2 that are currently accredited data recipients. I suppose, Gareth, you're one of them. Three now, but you're one of those 3. I guess we'll go to you first. What would you say are some of the learnings that you've picked up through going through that process, and your sort of feedback to other organisations seeking accreditation, or you'd pass on if we were to roll back the clock?
Well, I think probably it's a tricky one, because I think it was a bigger exercise for everybody to meet the standards of the ACCC, and they didn't really know what those standards were until we were in the process. So good examples of those are, what is the level of insurance that is required for our organisation to be able to consume data, and what does that look like, and where can I buy that policy? Those things weren't on a list that we could sort of scroll down and look, and then ring the insurance company and say, I'll take that policy please for CDR. But that's just a good example that every single step in the process we had a fair amount of work to do to be able to get that in place, and that was the same for every other ADR in the process. So I think unless you were actually well set up in September when you were handed the opportunity, then it was always going to be a really big lift to be ready for June. We were fortunate because we were already doing a lot of work that the ACCC was looking for partners, and that gave us the leg up and a little bit of a head start, I think, on everybody else. But I think that they're all starting, and I think probably one other thing would be that, if the ACCC had their time again, maybe they would have selected different ADRs, maybe they wouldn't. But I think it really depends. I think there are, from my perspective, there are probably other organisations that would have helped lift the ecosystem a little bit better if we'd had them involved in the process and given us more technology companies to share the load in that testing process to get live. So I think we all have our own. It's easy in hindsight, right? To say how could we have done it better. But I think now moving forwards, the test suite's better, the standards are getting better, the level that people need to attain, for the ACCC will not be quite as high as when we first came through. So not to say that's going to compromise, security or trust, just that it needs to be more achievable for us to be able to make this whole thing, I guess, get that flywheel effect where it gets some scale really quickly. But it'll take time. The UK was really slow in getting going, but once it got going, it was it's now starting to scale pretty quickly.
And Amir, over to you on that one. Watching it from the outside, what were your thoughts?
We weren't necessarily watching from the outside. When we work with the second accredited data recipient was Regional Australia Bank, who we work with to help them implement the open banking solution. So we definitely got to see it firsthand experience, and I think the drop-offs happened because I think a lot of the companies came to realization that the amount of effort versus value was quite low. So there were guinea pigs that were right at the beginning. The banks were trying to scramble to build out the required API and data interfaces, and then I think in reflection, a lot of these organizations already use aggregation services like Basics to be able to acquire accounts and transactions. So I think that I think open banking itself still has, hence my C- is kind of like report card. We need to get to ultimately a kind of place where you can go from idea to calling an API and getting that immediate value, and that time needs to be as short as possible, while making sure we do it in a secure and efficient way. And I think that the fact that it does take 6 months, it really does, by the time you get past all your regulation, accreditation, and all of that, and insurance, and then you have to finally you get to connect to it, and then you realize, okay, yes, it's the same API interface, but the data I get between the banks is not the same. There's data missing, so we still have a long way to go, but we are getting there. It's definitely, everybody acknowledges it. We know what the steps are. The right type of actions are being taken, so it's just a bit of a kind of like waiting patient game. So it will be a different conversation in 1 year from now.
Over to you, Jill. Anything to add there?
Yeah, I feel like I definitely align to what Gareth is saying. I feel like I remember like just going through it, and we're looking through it at even like ASAE 3150. What is this? Like, no one had. We definitely hadn't heard of it before. So exploring lots of those. And I think that we were surprised at just like how manual all of the tests actually were, and how many months it really went on for. Even with some of the like authentication or authorization, it wasn't automated, but you did literally have to, call someone from a major bank for a code, like those type of things. But luckily, that won't happen. That won't happen again. When looking back on it, you'd think that if they were to choose the top 10 again, it would probably be ones that really had the dedicated resources to really stick with it the whole time. Because there were a fair amount of dropouts, but it was a lot of work. But eventually, there are still a number of companies that did get through all the technical testing. So we did get there, and for the betterment of the whole ecosystem.
Fantastic. Now, looking to the UK, where open banking is a couple of years ahead of us, they recently passed the 2 million consumers having linked bank accounts using open banking. I think I've got that right. Is that number a good number in terms of how old the regime is? And what lessons can we look to take from the UK to fast track adoption over here? Demir, we'll go with you first on that one.
Cool. I know that there's a lot of analogies between kind of what the UK is doing, what Australia is doing. I can definitely say it's fundamentally different. It's not the same. UK has both read and write, so the ability to be able to read financial data and to be able to execute payments. We only have the ability to be able to read data. However, our initiative is part of a much kind of broader scope where we're looking at not just banking, but we're looking at insurance and telcos and eventually super funds and all of that as well. So I think that so we need to look at it through a different kind of lens. I think if I look at it on face value, 2 million for open banking UK, I don't think it's a very impressive number considering kind of population size, considering how many advanced kind of fintechs we have in Australia that have already kind of more than surpassed that, that are leveraging kind of competitive technologies to open banking that exist in the market at the moment. But it's not. I think it's just more of a vanity score. I think what we really need to be kind of measuring is the value that it's delivering to the actual customer. This is going to become the de facto standard. It requires a lot of change, particularly from the banking sector. So you think about effectively what the banks will have to do is to replace their current data assets of pay slips and bank statements and say, well, we're going to stop asking for that and we're going to ask you to connect your bank accounts. The moment they do that, it's a new type of information. It's a lot richer, but different in context as well. And it will require them to change their policy, risk factors, and so forth. So it is one of those things that is going to take some time to do. But I think that the way Australians in general, the way we kind of adopt technology, the way we've been using already financial data, the way we see companies like Zip that already kind of it's fundamental to an application is to be able to link up your bank account and use it. I think that I think we'll supersede that pretty quickly.
No, Demir, I definitely agree with you about it being the vanity metric. I mean, like goals, like what does 2 million really mean? I think it should really be measured in just like the overall. It is really hockey stick growth, but I think the questions are: what are all the different types of use cases? What different types of companies are data recipients? How difficult is it for them to be a data recipient? What's the growth of new data recipients, and the variety of use cases coming on? I think that that should be the focus for Australia. So cool, we've done the hard yards for the early data recipients, but how fast can we get a new flood of data recipients? How can we have 100 or 200 for in a year's time? I think that's what we should be really looking for.
Gareth, do you agree? Is users connected a vanity metric?
Yeah, I think so. Yeah. And I think also, number of API calls to all those things, but we do need a measure, right? We need something that says we've got engagement, because to be able to deliver value on those use cases, it's going to be, it may be hard to measure and then show that in the marketplace. But I think, that ultimately, the fact will be when we have, lots of people using, CDR in many different ways in the same household, to engage in their services, to leverage their data, to deliver better outcomes for them, is, a measure that we'll start to see where we get some kind of success on that. And as Jill's right, that that'll come a bit from the number of data recipients we have on board. That'll come from the number of APIs that we use, the number of consumers that touch and feel it. But ultimately, I guess we'll know when it's successful when organisations continue to invest in this space and we start to see increased momentum as a result of confidence that this is somewhere I need to be investing. So I feel for sure that we'll be having a conversation in 2 years' time where we're saying it's not going fast enough, we haven't delivered enough, it's not good enough, it's not good enough, it's not good enough. But in 10 years' time, it will be fairly ubiquitous in how we go about passing our data and moving our money will be off the back of this data that we're using across all industries, whether it be insurance, utilities, or or banking.
Very good. And looking past the UK, we seem to have a bit of a global trend now. The US is talking open banking. Without getting into that too much, we're seeing a lot of international players looking or eyeing up the Australian market. Obviously, it's seen as a potentially lucrative market for them. Do you have any concerns about these entrants coming in and marking their territory? Damir, I'll go with you first.
Not at all. I mean, look, open banking is a brand new concept. So new concepts require education. So we need to go. We need as many kind of educators out there to tell banks, to tell financial service organizations, to tell the fintechs as well, kind of what the realm of possibilities are. I think having one player is not enough. Having two players is not enough. That message really has to be brought in, and we're effectively. That's the kind of realm of responsibility that we all kind of collectively have, is to kind of spread the word of kind of what's possible. Here's how we can change financial services. Here's how you can adopt it. Whereas to RegTech, PropTech, FinTech, whatever it is, kind of service. And I think the more we have of them, I think the better it is, the more it becomes kind of like a de facto way of doing things. It becomes normal as well. And I think that will kind of definitely help increase the adoption rate. I think sitting on some government website and some kind of GitHub repo is not going to get it the success that it needs. So it does need as many kind of companies and players to be able to participate. I think through that, we'll see a lot of kind of partnerships and kind of working together. They're not all kind of approaching it the same way. So there's some that are focused a bit more on the consumer end, some are focused a bit more on the back end, some that are doing intermix of read and write as well. So I think it's quite exciting. We definitely welcome it.
Jill, any reasons to be concerned?
I think that just because a company is operating in open banking ecosystem overseas doesn't mean that it's very easy to come to Australia. There's absolutely barriers for them to be part of the ecosystem. If they're playing in open banking in the UK, it's definitely not a copy and paste to come over here. They're going to have to change their customer experience. They're absolutely going to have a number of very material technical changes to come here. But ultimately, if they can still have a great customer value proposition, that's what really matters. So I think that looking at US companies where it's not regulator driven, it's market driven, as opposed to other like the UK that's regulator driven. I think that there's two really different models in countries are going one way or the other. Obviously, Canada and New Zealand, they'll go reg model. So I think that when thinking about the initial review into open banking published in December 2017, led by Scott Farrell, it talked about passporting. So even though there is reg-driven model over here or market-driven over here, it is in the overall vision to how can you make sharing data across borders as well. So I think that will be really interesting when those cross-border data sharing really comes into all the rules.
Gareth, do you echo those sentiments?
I do. I have nothing to add. I think they're I think it's all very valid, and I agree. I think it is good to have competition, and it's good to have different experiences. So come on in. Let's talk, let's chat. And I'm sure that it will help all of us, drive forwards, and be better. So I think it's all good.
And Jill, you just mentioned the Farrell report, Open Banking 1.0 in Australia. What does Open Banking 2.0 look like, since you mentioned it?
Open Banking 2.0, that's really the right access part of it. I feel like I'm just a bit of a geek because obviously it's right next to me all the time. But as soon as you bring right access into it, well, you can think about it going from read to write access, but also Open Banking 2.0. That's when it's not just open banking, but it's open energy, it's open telco, it's open insurance. So bringing in lots more industries of data holders to share. That's what I see. New types of data and new capabilities of what you can actually do with it.
Thanks. And Damir, right access, is it a game changer?
Look, I think that it is a game changer. I'm not necessarily sure if it has to be part of open banking. We do have the new payments platform that it seems to be evolving steadily as well. So we'll see whether that effort is going to be required. I think 2.0 for us looks, again, I'm going to come back to the ability to be able to, have an application, have an idea, be able to kind of develop something really kind of quickly. And to us, that means the ability for someone that we do have this intermediary model that's supported, which is in the work, and there is a commitment from the ACCC to put that in place. But just having the ability for someone to come to basic.io, grab an API key, start connecting, and start kind of working with the actual service and focusing more on the use case rather than regulation, rather than accreditation, rather than all the paperwork and so forth. I think, but that'll be 2.0, because that will definitely kind of increase our freedom, increase our speed of adoption as well, and will definitely kind of help make it a success that it deserves to be.
Great, thanks. And Gareth, right access in the Frollo app? Do you love that?
Yeah, for sure. Yeah, you love it. Yeah. I mean, that'd be awesome. Yes, please. I think largely because the payment system here, currently doesn't replicate the UK payment system in faster payments. So that the level of investment that was made in the UK for faster payments, was pretty significant, and the infrastructure that's in place, delivers a pretty amazing experience, and it does so at a price point that makes it attractive to build use cases. The current issues with NPP in Australia is this price point, right? So it's so expensive for fintechs and other organisations to engage to move money unless you've got a significant amount of capital or operating cash flow behind you. So look, I think it's exciting, but it's exciting if we can build in the underlying economics to make it usable. It's not exciting if I've got a right access and I can do it. Much like it's not exciting to become an ADR if it's going to cost you an absolutely small fortune to be able to get there. To Damir's point, if you can't just grab an API and get working, then that's no good. But equally, if you can't then economically leverage open banking, you can't economically leverage right access, then you still have the same problem, right? We just built this huge infrastructure that nobody can afford to pay to play. So I think they're the bigger benefits, and hopefully the cross industry components, by bringing in energy, and insurance and all these other things. If we can all be plumbing into the same ecosystem, then we'll start to get some economies of scale, and also incredibly interesting use cases that make the ability to have right access linked to energy bill by banking kind of makes that pretty exciting. So, yes, it would be great. I'd be pretty excited, but please do it at a price I can afford.
Excellent. Now, Jill, you recently published a guide that featured 30 to 35, I think it was 35 use cases for open banking. Have I got that right?
Yes. Yeah. 25 ways the consumer data right will create smoother and smarter customer experiences.
And of those, are there a couple that you'd sort of pull out, or that are particularly applicable or valuable to consumers?
Yeah, well, absolutely. So I guess just going back on what Damir and Gareth were saying, obviously if you're going to be part of the ecosystem, you have to have a good business case and a good customer experience behind it, because it is an investment, so it should be worth it. I think that account aggregation, to me, that doesn't stack up for a business case, and many of the aspiring ADRs that we talk to, but a lot of them that really bring great customer experiences, but also business efficiencies. So we've divided into smoother and smarter. So smoother reasons to participate in the CDR, it's taking something that you do right now and making it less manual, making it faster, making it automated or verified. So it's a great reason for a customer to actually share their data. So instead of sharing PDFs or screen scraping, that they can that they just have much more confidence, and faster for them to share their data. Ultimately, if they can get to a faster loan outcome, or whether it's a yes or no, the amount, as opposed to what they're doing it before. Lending is a really key application. So another thing that Damir talked about was, I think it's really important right now, is actually credit assessment is one use case that banks are doing right now, but credit monitoring is going to be the newest thing for lending. I remember working at other banks, is that often you wouldn't know that someone's actually in default or in financial hardship until you have the third rejected direct debit for a loan. That's a terrible customer experience, and a really bad one for the lender too. So how can you share your data in real time so the lender actually can check up on the health, look at the early warning signs, and instead of having a default, having bankruptcies and really terrible experiences on both sides, how can you look at the warning signs and be proactive and help before someone's actually in hardship?
Great, thanks. Gareth, what about you?
Yeah, I mean, in terms of use cases, I think product switching is interesting. In terms of organisations that are out there thinking about, so when I say product switching, that could be a multitude of different products. It doesn't have to just be financial institutions, but being able to consume that data to be able to deliver, a more competitive offer is very interesting for organisations, and it's kind of an early use case. I think on the same vein, retention as well is also incredibly important. So to Jill's point, we talked. She mentioned sort of credit health. So how are you tracking in a product? But equally, we can start to be proactive. Athena are leading the way in terms of being proactive. In their home lending experience and delivering price drops when they come through on interest rates, but also more competitive rates when your financial situation changes, your LVR shifts. So I think those kind of experiences are going to be much more powerful and have the opportunity for organisations to be able to deliver on quite easily with the ability to consume that data. In addition to Jill's ones, they're absolutely valid too.
And Damir, what are you liking at the moment?
Yeah, cool. So I think so one of the things that we try to kind of we try and frame kind of open banking to customers and to kind of get them to think about use cases and what's kind of possible is to look at it from the perspective of that what open banking effectively enables you to do is to be present at your customers' every single payment that they make. So as a customer executes a payment, you have visibility into that. And provided that the customer gives you consent. So the fact that you have visibility into it now means that you understand your customer a lot better. So you can tailor highly personalized services for their particular need. All of a sudden now you can understand your customer's brand preferences. Do they prefer to shop with Harvey Norman or JB Hi-Fi? What's important to them? What do they care about? What's their spending habits? And then just kind of being able to leverage that kind of information to be able to provide something for your customers or your users that they genuinely care about. So we're seeing a lot of interesting use cases, particularly around the reward space, where customers are leveraging bank transaction data to be able to reward customers. And we've seen phenomenal success of being able to change their behavior, where they say, like, for example, if you shop at if you go shop at Priceline instead of Chemist Warehouse, we'll give you some kind of cashback offer. And we've seen it kind of firsthand that you can shift customers' buying behavior, so that becomes interesting, but then also rewarding customers for that as well. I think it'll create some really interesting use cases. It'll be even more interesting when that starts becoming open with merchant, where a customer says it's okay for JB Hi-Fi to understand my financial kind of spending patterns, provided that I get some kind of reward out of it. And then the question is going to be, well, what does it mean for you, JB Hi-Fi? What are you going to do with that information? And how you're going to deliver better quality service for your customers.
Great. And then finally, before we wrap up, I'll just ask each of you if there are any overseas examples of open banking in action, specific applications, specific products that are being used and absorbed by consumers at the moment that you really think are interesting and you'd like to see over here at some point in the future. Jill?
Absolutely. I forgot the name of it, but it's actually a use case that's in the UK that's in my use case paper as well. There's a fair amount. It has to do about just like financial verification for real estate. So many times you share all of your statements and all of your financial transaction information with companies that actually they don't need to see everything about you. They just need to say, can you afford this? Yes or no. And it was a real estate example for renters that you share your open banking data, and instead of them receiving everything, they just have a quick analysis to say, like, oh, can Jill actually afford this rent? So it's a good customer experience. Less sharing of actual like statements and documents, and everyone gets the answer that they need in a timely fashion. So I think that for real estate, for renters, for home buyers, I think it's a really great application.
I think I know that one as well. And again, I can't remember it either. Damir, any products that you'd point to or look to?
Yeah, I love Digit.co. So if you haven't checked it out, check it out. It's a US product. It's phenomenal. So it actually started one of the most successful fintechs that had an app without an app itself. So the whole kind of interaction was through SMS. The whole concept is you link up your bank accounts, and what they do is they analyze your financial data. They send you an SMS to say, hey, you can comfortably put $20 aside, because they work out what your spending are, your bills that are coming up. And you simply respond back for SMS saying yes or no. I'll take that money, put into some kind of account for you, and they've now hold over $2 billion worth of money that they've helped kind of people in the US kind of save. That wouldn't have been possible otherwise.
Wow. Sounds a bit like Chip in the UK. Gareth, very quickly.
And we're out of time. No?
And it looks like we're out of time. So we will wrap up there, guys. Thanks very much for your time. Gareth, Damir, Jill, see you soon.